Hey everyone, and welcome back to the FishMarketAcademy, where we teach how to fish for gains. So in today's video, we'll be going through Demex with the token symbol as SWIFT, SWTH. And I think it might be one of the most undervalued perpetual protocol in DeFi. So in this video, we'll explore what is it and why I think there's a lot of upside potential. So without further ado, let's begin. And if you find this video useful, do remember to like and subscribe. So quick disclaimer, of course, nothing I say is financial advice, and extra disclaimer, I do work for this company, so please make sure you do additional due diligence as well, as my views may or may not be biased. But this video is not sponsored, although I probably should ask my boss for a bonus. I'm just kidding. Let's get started. So what is Demex? It stands for Decentralized Mercantile Exchange, which is similar to the Chicago Mercantile Exchange, where the aim is that you can create a product for any asset and trade it. So that's what Demex is, and the website is dem.exchange. So I'll put all of these links in the description below as well. So Demex is a fully decentralized trading derivatives DeFi platform that operates on the Carbon protocol on Cosmos IBC network. So it's built with the Cosmos SDK, and the language they use is Go. So the platform allows for liquidity providers to earn rewards for market making, as well as for traders to trade and leverage up to 150x leverage, while providing a SEX-like interface for familiarity, as many traders do trade on SEX. So there is a order book, and there are limit orders, etc. So Demex can be connected to all IBC chains, Ethereum, BNB, Neo, Zilliqa, and more coming. So we are sort of like, because we are built on Cosmos SDK with IBC enabled, we can connect to all IBC, but because we are our own chain, we can also connect with any other chains. So if there are a lot of requests or demand to connect with a new chain in the future, like Solana, like Aptos, those are technically possible as well. And there are many advantages to trading on Demex. So let's go through them one by one in the following slides. So starting off with how Demex works, it's a pretty interesting model that we don't see often. It's a hybrid model between AMM and traditional order book system. So, if you use Uniswap, SushiSwap, you can provide liquidity in an AMM by providing the pair. And on Demex, you can do that as well. And they have this proprietary engine that actually takes the liquidity that you provided and spreads them across the order book, creating sell orders and buy orders automatically from the liquidity that you provide. So that's pretty cool, because there's no swap interface at the moment. There's only an order book interface. So that's how they use your liquidity pool and turn it into an order book. And of course, because it's an order book, you can do your traditional market making strategies where you just layer limit orders on the sell side and on the buy side for the traditional market makers. So this way, we actually allow for both the TradFi type of strategies and the DeFi type of strategies to benefit traders and to benefit LP providers and market makers. So it's a pretty interesting model that works and has a lot of benefits. So like I said, Demex uses this proprietary engine that spreads any liquidity across the order book. This means that anyone can be a market maker on Demex and can also trade in that market, unlike most other perpetual protocol that use a third-party market maker where they take all the fees. So one example is like DYDX. You can't really provide LP on DYDX, but you can still provide your limit orders, although that is not automated. You can't do that automatically. And that's just not feasible for the everyday person. So that's why Demex is more attractive for the everyday people that want to benefit from market making activities, and still collect all the fees without a lot of hassle through their LP provision system. So additionally, because it's permissionless, anyone with a protocol and a token can create their own market with just a little SWIFT, and they can list their own pairs and provide liquidity for their own pairs and swap with their own pair, etc. So the next up is the super capital efficiency. So Demex plans to enable multi-asset collateral and cross-margin. So these are two separate features in the future. So what this means is that multi-asset collateral will allow you to have any whitelisted IBC asset, including LP positions, to be used as margin. And cross margin means that they can take all of your whitelisted margin as well as margin for trading on perpetuals. So for example, if you have Atom USDC LP, right, you deposit Atom in, you deposit USDC in, you can use, and then you pair them together, you can use that pair as margin to short Atom and hedge that position without topping up any additional capital. So you can't really do this right now anywhere actually. If you are, let's say you want to put Atom USDC LP because it earns about 50% APR, for example. You deposit Atom, you deposit USDC, then you pair it, and you want to short Atom to hedge it, right? You need to actually short it on another platform, or you can short it on the same platform, but then you need to bring in additional stablecoin in to short. That's because the platform doesn't have cross margin. But when Demex enables cross margin in the future, your entire LP can be used as margin, so you don't have to top up any additional capital. You can just use your LP to short, and this is very efficient. So it's going to open up a lot of flexibility and strategies for hedging, for trading, etc. So currently Demex offers up to 50x leverage, which is the highest in Cosmos, or one of the highest in Cosmos, and they are able to actually do 150x if people demand, or if volume starts to increase and people are requesting for it. So next up, we have fully customizable UI, and this is useful if you are coming from another trading platform where you already have your own UI that you are familiar with. On Demex, you can actually drag and drop, you can resize, position, etc., so that you can change the UI to the one that you are familiar with, and that's just a nice quality of life feature. Then we have futures contract, where Demex is the only trading platform in DeFi that offers dated futures. So futures that actually expire. And this allows you to do the popular cash and carry arbitrage trade that we see on many sexes. So like on FTX, you can buy a spot position for BTC or Ethereum, and then you can short a futures contract that is in contango, which means it's higher than the current spot price. So basically you capture risk-free profit, as there is no funding rate for futures. And of course, there is no funding rate for spot as well. So this is a very popular strategy on SEX, but you cannot find this on any DEX platform apart from Demex, at least from my knowledge. So that's one of the cool things that Demex has. But the liquidity is pretty poor, as it's mainly purely peer-to-peer. Although once traders start to come in, then this will resolve itself. So we need a lot of marketing. So next up, we have on-chain referral, right? So one of the ways to get more marketing done is for getting your traders and your users to help refer more people. So that's why they are creating on-chain referral, where it's similar to GMX model, where you create a referral link based on your wallet address, and then you gain referral rewards when traders join and trade using your link. And what's cool also is that this is built on the Carbon network layer. So other dApps can come in and use this module as well. And some of the fees are directed in a commonly shared pool owned by a DAO. So if you want to create like some other protocol, some other trading finance related protocol, you can just tap on this link if you build on Carbon. Side note, Carbon does have a incentive program for developers. So if you're thinking of building an app, you can come build on Carbon, and you can also get paid to do so as well. Okay, so the next up, we have flexible network fees. So on Demex, you can select any layer 1 token or even stablecoins like USDC for your network fee. And this is a really nice quality of life feature, because usually when you send your funds to another network, you get stuck because you don't have the native gas token. But with this feature, your asset that you send over, it's typically going to be a stablecoin, or it's going to be like Ethereum or some layer 1 token. That itself can be used as network fees behind the scenes. So you don't have to care about getting the native gas token. You don't have to go into like the Telegram group or ask your friends for gas, or go to the faucet for gas, and then the faucet doesn't work, and then you're like, how do I even get gas? None of that problem will happen with their flexible network fee. And so this is live already. So if you bridge in today, you don't really need to bother about fees or gas fees. With the deployment of multi-asset collateral coming in as well, it's going to make trading on Demex way more seamless than trading on a SEX. So if I go on a SEX, right, I don't have an account, I have to go through account creation, I have to do KYC, then I have to bridge my funds in, and then I need to swap it into USD, then I can start trading. But with Demex, I can send like Ethereum in, and then I can directly start trading with my Ethereum as my collateral once multi-asset collateral goes live very soon. So that's going to make it very, very seamless and easy to trade on Demex. So there are a lot of other features that Demex has, and there's a comparison table with other exchanges as well as other decentralized exchanges in the areas of trading, security, service, and fees, and they can be found on the website. So you can just go to the main website and then scroll down, and you can see all of these for you to know better as well. So all the things that I've mentioned, you can find on the website as well. And there are way more things that is on the website that I can't talk about in this video. So if you want to find out more things about their trading fees, their security, their service, etc., and compare them against centralized exchange and decentralized exchange, you can just go to the website, dem.exchange, and then you can see their feature comparison table. And it's pretty good. So moving on to Swift token utility, it's both a utility and governance token, and let's go through some of the use cases. So of course, you can use it to do governance stuff like voting on proposals, etc., because Carbon is entirely on-chain and proposals can be enacted without the approval of a committee. And in the future, there will also be discount on trading fees. So this is similar to like FTT or BNB, where if you hold the token, there are different tiers that helps you to reduce trading fees for ticker orders. So this feature is not out yet, but will come soon as well. Because they did it previously already, but then when they migrated to Demex, they paused it. Swift actually has been around since 2018, so they've been around for a few years. And Demex is their new protocol, because previously they were a decentralized exchange for some other platform. Then they decided to do their own one on Cosmos SDK. So that's a little backstory. And of course, everyone's talking about real yield nowadays. So Swift token can also be used for staking yield, and transaction fees will also go to stakers creating real yield. So later on, we'll be covering how much real yield can you be getting by staking Swift on Demex. And there will also be liquidity rewards. So as one of the few club dexes that users can provide liquidity, you can also get paid to market make for order book by providing liquidity in any of the Demex pools, and they use Swift as the base pair for the collateral. And next up, we have the upcoming CDP feature that will go live soon, where Swift can also be used as collateral to open CDP, which stands for collateralized debt positions, and use that to borrow against other assets across all Carbon integrated chains. So for example, I deposit Swift token, and then I want to borrow, let's say, Atom token. So let's say I deposit Swift, I can then borrow other Carbon integrated chains token like Atom, Zilliqa, Ethereum, etc. So as long as they are listed and whitelisted on the platform, you can borrow against them. Then I can actually take the Atom that I borrow and then pair it with some of the Swift that I still have and provide LP. And then I can, basically hedge in a DeFi farm in a relatively hedged manner. Because if Carbon goes down, my loan amount also drops. Not linearly because of impermanent loss, but you get the idea. Lastly, Swift can also be used for bridging. So if there are more and more chains integrating with Carbon, then they can actually be used as an intermediate bridge. For example, if I want to send Ethereum over to Aptos, for example, and then we already integrated with Aptos. So I can send Ethereum in, swap it into Swift, and then swap Swift into Aptos, and then send Aptos out into Aptos chain. So that's a future example of what you can use Swift as a bridging token to do as well. So moving on to token supply. So Swift has a max supply of 2.16 billion with almost 80% of its supply in circulation, and this reduces the inflationary pressure and selling pressure for Swift holders. So right now the price is about 0.6 cents, not even 1 cent, and the market cap is about 10.5 million with the fully diluted valuation of about 13.3 million. So these prices may change by the time that you see this video. And this is why I think Swift might be potentially undervalued, because if we compare with the FDV of other perpetual protocols, later we will take a look at some examples, you can see that this FDV is about 10 times cheaper than most of them. And the features that Swift has is actually more than some of them. So there's a stronger feature set and a cheaper valuation, and that's why I think there is an undervalued opportunity. So looking at their inflation schedule, the Swift emissions will end after 5 years, and we are already on year 3 and ending year 3 already. So in less than 2 more years, there will be no more inflation left. And the remaining 2 years inflation is only 20% of the total supply, because already 80% is done. So there is really very little emissions, and I wouldn't really worry too much about emissions being an issue that will cause price to drop at this point in time, especially since we're in a bear market. So moving on to valuation analysis, let's compare Demex with some of the other Cosmos Perpetual Exchange, Kujira and Injective, and DYDX. DYDX is not included here because they are too big, but I've done the math for them as well. So if you look at the MCAP and the FDV, you can straight away see that Demex is by far the cheapest in terms of FDV and MCAP, at about 10 times cheaper than the other two competitors. Demex has a PS ratio of about 220. That's really high, but if you compare with Injective at 150 and Kujira at 315, they are all generally pretty high. So I wouldn't worry too much about this because they're all considered low market cap or high growth potential protocols. So it's basically all moonshot bets. But let's look at what I think has a lower risk and higher upside potential. So if you look at MCAP and FDV, you can see that Demex has the lowest MCAP. In fact, it's like 10 times cheaper than the other two. So that's pretty good. And if you look at volume, then you can see why it's so much cheaper also. There's a lot lower volume that Demex has. But in terms of feature sets, I don't think Demex is really losing out compared to Kujira Injective. In fact, I think the upcoming features we have will make it more feature packed than the other two. And in a bear market, I think volume is low is normal. And I'm really thinking that if the bull market happens in 2024, 2025, whatever, and then Demex goes, the potential upside for Demex hitting a higher volume, the multiplier is way higher compared to something with decent volume and going higher. So that's just one way to look at it. And also looking at the price, right, we are the only one with like a meme price in a way. Don't know whether that's good or bad, but there's certainly some unique bias. So if we can go to $1, then that's about 150x from here for the SWIFT token, and that's a lot of upside. Yeah, I don't think it will go to $1, but later on I'll present some scenarios where we can actually go to $1. It's not impossible. So let's take a look. So if we look at the PS ratio and assume 20 to 30 is decent for a fast-growing protocol, here's what SWIFT could be worth. Like, right, let's say we get a 1 million daily volume, right? That will give our analyzed revenue 730k, and then our SWIFT price will be 0.6 cents, which is kind of where we are right now. And then if we have a PS ratio of 30, it will be 1 cent, about almost 2x. So this is like what we call is fair value of sort. But I think if we were to go into a bull market, then we probably can go into 5 million to 10 million daily volume region. It's not impossible. It's actually not a lot for an exchange with perps that has leverage, right? So looking at the price to sales ratio, we can actually go to 10 cents at 10 million. So that's actually a 15x from here. And that's pretty good risk reward, seeing that I think the downside risk is not too much, but the upside potential is quite a lot. And of course, if we can go to a 100 million daily volume in really a insane bull market that will come after the Fed start printing, after the depression, don't know how long that is, recession, sorry, we're not in depression yet, I hope, that can actually bring us to $1, which is 150x from here. That's assuming, of course, 20 to 30x PS ratio still maintains. Yeah, and this is not even factoring in the revenue from future developments that will come. So if future development has different revenue streams, like our money market, our collateralized, over-collateralized stablecoin minting, liquidation fees, etc., these are all not factored in here at all. So this is a conservative estimate, and I do think these numbers are not impossible. Honestly, if it goes to 10 cents, it's a great upside from here already. But even $1 is not impossible if Carbon becomes like the de facto trading protocol and money market protocol for all of Cosmos. Will it happen? I don't know. So based on this, use your own risk appetite to adjust your allocation accordingly, right? Don't degen all in, maybe get a small bag, etc. And if we look at real yield for people who cares about real yield and real revenue generated to stakers, then let's assume 5% is decent. SWIFT will be worth the following amounts depending on the volume. So 1 million volume, SWIFT will be about 1.2 cents if we maintain a 5% APR, if people think this is attractive enough. If not, if they want 10% APR, which is about where we are at now, then it's 6 cents. So this is again is about fair value. But if we move to 10 million, then you can see that we 10 times from here. So if APR is about 5%, where people find it's reasonable, then there is 20x upside from here. Then there's a 20x upside from here. If not, 10% APR will be a 6 cents, which is a 10x upside from here. So not too bad. And moving on to 100 million volume, then we'll be talking about a 200x upside or a 100x upside, depending on how much the APR you think would be reasonable for people to stake. Of course, if the price actually remains the same, right, then the real yield APR jumps up to 1000% if we maintain a 24-hour 100 million volume. Yeah, so these are just various scenarios for you to play. You might need to like mix and match some of the figures between the real yield APR and the APR of 10%, etc., to get what you think is a reasonable SWIFT price. But I think in a bull market, as long as we can hit 5 to 10 million volume, which I think is possible, then we should basically be looking at a 3 cents to 12 cents type of price range, which is about 5 times to 20 times upside from here. So let's look at future developments that the revenue has not even been factored in yet. We have money market, multi-asset collateral, liquidation, market neutral leverage yield farming vaults, decentralized stablecoin, decentralized options. So let me go through them one by one, and we should be more or less done with the video. So looking at the decentralized money market, it's basically similar to Aave, where users can lend or borrow crypto from various chains permissionlessly. So I can deposit Swift, I can deposit Ethereum, etc. And then I can borrow Osmo, I can borrow Kuji, I can borrow any carbon asset that is whitelisted on the money market. So that is basically Aave's model, and it should generate quite a bit of revenue as well. Additionally, Demex will also be launching its own decentralized stablecoin with an over-collateralized model similar to DAI. So you will deposit an asset, and then you can mint stablecoin out of it. The asset will probably start off with Swift or with Atom, and more assets can be whitelisted to be the collateral for the decentralized stablecoin minting. So the team also will be deploying a public liquidation platform to provide additional utility for their money market and stablecoin, and anyone can participate in these liquidations with no fees. So if you liquidate someone, you don't have to pay any fee in the entire process. Of course, the person that got liquidated will be paying liquidation fees still. That will be in the form of like discounts, etc. And the Demex protocol will take a little bit to give to Swift stakers. In fact, all of this revenue that is generated, a portion of them will also go to Swift stakers. So that's under real yield. So coming soon is also multi-asset collateral, which I already explained previously, so I want to repeat again here. But this is a really cool feature that I'm looking forward to. The next one is market neutral leverage yield farming vaults. It's a complete mouthful, but essentially it's similar to like Mars protocol, where you can leverage yield farm, but there is an additional option to hedge your position by shorting the volatile asset on the back end. So it will be a vault, so you don't have to do anything. So you can just deposit USD, and for example, if you're doing Ethereum USD 3x or Atom USD 3x, they will short Atom on the back end for you, and you just deposit USD or Atom inside. So this is a good way for farmers to farm during a bear market. So finally, Demex will also be integrating decentralized options onto their platform, but this is going to come further down the road. And this will allow users to come up with many creative and hedging strategies with perps, with multi-asset collateral, with all of these features. So all in all, it does sound like there's a very exciting roadmap coming, and I think the potential upside is pretty good. So moving on to a quick demonstration before I go into the conclusion. This is the website, and you can see some of the additional details about the protocol and the chain. And when you go in, this is so you can see the different liquidity pools. Let me zoom in. So if I want to provide Atom Swift, for example, it's at 73% APR. Granted, the liquidity is a bit low, so if you put in a lot, then the APR will drop. But this is also lock staking, so you can commit 30 days to get higher, and you can have it at 0 days. And you can take out anytime you want, but it's also lower. So this is a pretty cool, interesting feature for people who are more long-term. And if you go onto the trading platform, you can see the charts, you can see the order book, you can do your limit, market, stop limit orders. So stop market will be like a stop loss, etc. and then there are a few different pairs you can trade with. So all in all, it's a pretty easy to use feature. I've traded on this and I have no issues. Bridging in is also very convenient. You just bridge your stablecoin in or ETH in. Just take note that if you're bridging stablecoin, USDC is from Ethereum, but if you're bridging BUSD, or you're bridging from BNB or BSC, you can only bridge BUSD. Yeah, you cannot bridge USDC from BSC. So just take note. So if you're bridging USDC, make sure you send from Ethereum. If you're bridging BUSD, make sure you send from BSC. And not any other ways at the moment. Okay, moving on to the conclusion. Demex is a fully decentralized derivative platform that allows you to do all things finance related, from DeFi farming to trading to lending and borrowing. And it will also be integratable with other chains, with IBC chains, Ethereum chain, etc. Although they have been around since 2018, they are not a very well-known protocol. I think there's a bit of a confusion with the name. So let me just give a quick rundown. Carbon is the name of the chain. Demex is the name of the protocol. Similar to how Ethereum is the name of the chain, and then Uniswap is the name of a protocol. Or how Kujira is the name of the chain, and Fin is the name of the protocol. And then the Swift token is the governance token, and it's called Swift because they started out as SWTH Labs. So that's the name of the development studio that creates Web3 protocols, and the name just stuck with as Swift because changing the name, ticker name, is a bit cumbersome. So I think they are quite undervalued at the moment because they are not very well known. It's not very shared on Twitter yet. And I think once volume starts to pick up, especially when they launch their money market, because they will be one of the few money markets on Cosmos, I think there can be a lot of traction. And if volume picks up in the next bull market, I think the upside potential is pretty decent. There are also many exciting developments that they are working on right now, which I have just went through. And I think all this will drive revenue up, which will increase the price of Swift once they are completed. But ultimately, at the end of the day, make sure you do your own research and invest with caution, and make sure you allocate and size your bets appropriately. So hope you guys found this video useful, and if you did, remember to like and subscribe, and I'll see you guys again soon. Bye!
Baby fish